Oh, well, yes, I have Krithivasan, the CEO of TCS, as well as NGS, the CEO at TCS, joining us to talk to us about Q3 and, more importantly, declutter the myriad of pulls and pushes that we are seeing in the sector right now. But, gentlemen, since this is the first time we are speaking in 2024, let me take a moment to wish you a very happy 2024 to you and the TCS family. And let me begin by just asking you that. How do you think, Krithi, 2024 will be different for the sector and yourself versus 2023?
See, we look at our order book. Okay, the order book has been very positive. So it gives us a confidence the clients are still thinking long term, still thinking strategic programs. They are trying to improve more, get more digital transformation, and there is more technologies like generative AI coming into play. They would want to get more benefits, products, new services coming out of all these things. So we are quite optimistic in the medium to long term. So that's a major difference for us compared to how 2023 panned out.
Okay, so medium term is optimistic.
Medium to long term, yeah.
Fair, medium to long term is optimistic. But let me take a leaf out of that and discuss client budgets. Because the last time we spoke, you said that you'll be better placed in January to talk a bit more about it. Talk to us about how things look right now.
We are not in a position to call whether the budgets have improved. But again, we kept mentioning yesterday, we also moved away from that, reading too much into the annual budgets.
Okay.
And our clients are also, because everyone wants to be agile, the decisions are taken almost on a quarterly basis based on the situation. So we keep very close watch and work closely with our clients and make our decisions, and we don't read too much into these annual budgets anymore.
Sure, and just before I come to you, NGS, let me wrap that point, because the reason I ask you about client budgets is at least it gives us some sort of visibility, a guiding beacon of sorts.
We don't have that visibility as of now.
Fair enough. So, NGS, let me bring you into the conversation, and I want to talk about the BFSI vertical specifically. This time around as well, there was another decline. In fact, it was more pronounced this time. Are you confident to call it the bottom, or do you think it will get worse before it gets better? Will Q4 see a growth in BFSI or not?
Good morning and Happy New Year to you and your viewers. I think the way to summarize this whole thing is we are enjoying the uncertainty, right?
Really? You're enjoying the ride?
And, BFSI, as we called out yesterday, I think we don't see any aberration per se in our client portfolio, right? There are a couple of large engagements in BFSI. We completed during the quarter, and that has resulted in some amount of weakness. And seasonally, almost in every market, BFSI segment has furlough impact. So that has really, whatever the minus 3% that we talk about this quarter is attributed to that. And, sectorally, in our client portfolio, we don't see a weakness, and we should be able to do well in the coming quarters.
So a growth coming back in Q4, broadly speaking, or at least not a decline of 3%?
We are focusing on that. We are completely focused on that, and we would like to deliver growth in the BFSI segment in the coming quarters. That will set a good exit rate for us moving to FY25.
Sure, point taken. I also wanted to discuss North America specifically with you, gentlemen, because that's seeing a continuous decline. I think it was the fourth quarter of decline that we have seen this time around. What do you think will mark the turnaround there? What are the monitorables or triggers you're watching out for? And I ask that because if it was about Fed commentary, that has changed a bit. Are you seeing any difference in the ground? Either of you can take it.
We are not seeing any major change from what we reported last quarter. Our belief is once there is a greater client confidence on where the economy is going, and there will be greater confidence in then spending on new transformation programs. But at this time, most of our clients are in a wait and watch mode and conserving cash.
I agree with the sentiments have to turn around a bit.
But and they haven't as much yet.
We haven't seen any, it hasn't deteriorated from the last quarter, as I said yesterday.
Always a glass half full guy,
which is the good news. Which is the good news. But overall, I think, it will turn around is my feeling, because manufacturing is doing well, life sciences, healthcare is doing well, the power and utility sector is doing good in North America. There is no reason why the other sectors should not do well in the coming quarters, right? It's an election year, and people are, looking at the early trends that, Iowa caucus is going to happen soon. So I think some of these things will pan out as we see it, and some positive news will have to come for these other segments.
Let's see and wait for that positive news, but there has been enough positivity around UK because that continues to deliver good growth for you, even though the growth rate has come off a bit from 10% to 8% now. Do you see this strength continuing in the UK market, at least for the immediate term?
I guess so. I think, the pipeline that we have looks good, and we are working on some good opportunities in the financial services as well as the energy sector in the UK. Europe has nicely turning around, and then over the last few quarters, it's been moderated, bottomed out, and this quarter we have seen some green shoots. Actually, Europe has grown for us. So I think Europe and UK should do well in the coming quarters for TCS.
Okay, so that's good to hear. Some green shoots in Europe, and UK will continue to deliver well. But the other point that I want to probe further with you, Krithi, is the revenue leakage that we have been talking about over the last couple of quarters, which is basically the differential between the ramp up in the new deal wins versus the kind of old billings. Has that gap narrowed at least? Is there any improvement in that?
It's more or less, at least it is not like NGS said, it's not worsened, which is good news. And as our clients gain more confidence as we go into the year, we should see some narrowing of that gap.
Okay, so hopefully a bit more of narrowing going forward. But NGS, this time around, there was a bit of a slip in the deal wins as well. And I call it a slip because you have spoiled us with that $10-11 billion kind of numbers. And the guidance that you gave in terms of 9 to 11 billion quarterly run rate. But what I want to point out is over the last 3 quarters, we were seeing that the deal win momentum was strong, though the revenue was a bit slow. Now that deal win momentum is also slowing, should we read too much into it, or do you think there's only a bit of a timing gap right now?
I think you should not read too much into these numbers, number one. But I think, the way that we look at it is, last 12 months basis, if you look at the deal wins that we had, and on a year-on-year basis, that we have grown by 11.9%, right? Which is actually a good sign. And this $8.1 billion of total contract value that we have signed comes after 3 good quarters of 10 billion plus, right? So from my perspective, I think 8.1 is a very good number, and it comes without any mega deal support, right? Which means that it's a very broad-based, lot of small to medium-sized projects, and all of that we should execute it, in a shorter time frame than a 5-year time frame. Typically large deals tended to be over a 3 to 5 year time frame. These kind of deals that mark $8.1 billion will all get executed in, let's say, 1 to 3 year time frame, which should augur well for our growth in FY25.
And in fact, this is the point I want to discuss more. When you say that the mega deals are lacking, at least in this quarter, is this entire nature of the deal wins which is changing? People and clients are looking at more shorter duration deals as you talked about, or there's enough pipeline of mega deals as well?
No, it varies, and our pipeline has certain large mega deals.
Okay.
The decision-making cycle of mega deals, as I've always explained, it varies about 12 to 18 months, right? And we are in good stage in some of those large deals that we are pursuing. But as I said, $8.1 billion is no mean achievement. I would like to compliment my entire sales team, right, for achieving that in this quarter. Yeah.
Okay, so 8.1 billion is good and you're complimenting a sales team. But, the other point that I want to discuss with respect to the deal momentum is the fact, in terms of the various verticals, how is it panning out? Could you break it down for us in terms of what BFS has done? What are the other segments doing in terms of the deal wins?
Anisha, we gave out the numbers yesterday. More or less all of them have done well. Like compared to the previous Q3, all of them have done well. There's a good improvement, but like NGS said, you cannot look at the deal wins in the same lens as revenue. Like it doesn't follow the same revenue trajectory, because there's always certain amount of lumpiness. There's a timing issue. You need to look at over a long period of time, or last 4 quarters, how the deal wins have been, which is very strong. And this quarter, like we said, it's not aided by any mega deals, because mega deals tend to be lumpy. it's all come from mid-sized deals. So we are very happy with what we achieved in terms of deal wins.
Sure. And NGS, I wanted to get a, glean into your experience and ask you that historically, how has it panned out? When there is this extended pause of sorts on client budgets, is there a sudden pent-up demand that follows? And is that what you're expecting for FY25 then?
Normally it happens like that. When basically, budgets are intact. They're a bit cautious about releasing it, waiting for the directionally, where the market is going, where the economy is going, the consumer sentiments, how it looked like, and then whether how the mortgages are doing, how the real estates are doing. Some of those economic indicators will play out. And in an election year, they are all very important. And politically, what direction the markets will take, right? And whenever that happens, generally, there'll be an uptick, and sudden uptick at that, right? But having said that, some of the projects that customers have initiated in terms of moving workloads into cloud migration, cloud transformation, as well as embedding artificial intelligence related services into those projects, they are all continued to be uptick, and they are not holding up any budgets with respect to those executions, because it's kind of, they've started it, the earlier they finish it, better it is for them. If you pause, and then it's going to take more time, more cost for them, right? Likewise, like Krithi explained yesterday, some of the projects of cloud-related projects that we started 2 years or 3 years ago, at that time, the Gen AI and AI-related technologies and architectures were not well defined. So there is a lull in that, saying that, look, let's step back and see whether we should tweak those architectures so that, those things will, currently we are doing something like that, architectures getting redefined so that further acceleration on that will happen in the coming thing. But I don't see anything, fundamentally wrong with respect to the IT spend. And as we always said that, look, more and more of business is getting embedded into technology, and we should see the demand pending up.
I just want to scratch that AI point further, but before that, you very carefully dodged my question yesterday when I asked you whether there'll be double-digit growth in FY25 or not. So let me try and reword and make it easier for you. Do you think at least FY25, the growth rate will be better than FY24?
Absolutely, yes.
Okay, so at least that's the...
Yeah, otherwise, we are, I don't know why we should exist, right?
No, I mean, you can't help if the demand environment goes awry, right? But, so you're as confident about double-digit growth as well then?
I don't want to give such guidance, but then I think as a management team, we are extremely focused on getting back to growth. And at that, we would like to see a very broad-based growth across markets and across verticals. We have a very passionate team, and pipeline looks good. All are indicative of a better FY25 than FY24, which is what we would like to see, which is what we would like to accomplish.
I think that's an important statement to mark, that FY25 at least is going to be better than FY24.
Absolutely.
But
Absolutely.
Artificial intelligence that we are talking about, and you talked about how 4 of the projects have actually reached the revenue stage and you are seeing some sort of improvement there. Could you help us, get a bit of an insight in terms of what's the size of these deals, and more importantly, what is the nature of these AI deals? What's the client use per se, or business use that, clients are looking to tap into this AI opportunity for?
Anisha, I explained yesterday in another call, I think. So, first, these deal sizes per se are not material. What is material is that more and more of them are getting into production. And so people are trying to use it, see what is the real life usage, how people are benefiting from it. So, and then it will start a whole slew of projects moving into production or more new experiments happening. And in terms of projects that we explained, that broadly we categorize them in 3. Like one is what we call assist. Just summarize all the data. Based on the summarization, you ask a question, it says what's going to happen. That's what most of us ask on using. The second is what we call augment, right? Help you in doing something when it works along with you like a co-worker. The third is helps in transformation. So these are the 3 broad categories of projects that that's the way we categorize the programs or projects we do in generative AI. So you see more of them happening in the assist phase here.
Okay.
So, and also the more value will come as you move from assist to augment to transformation is when more and more value will come. But for that to happen, we need to experiment, get used to assist before we go into augment and transform. So that's where we are.
That's interesting to hear how that is panning out. But the other trend that a lot of us are talking about is GCC, or the captive units that a lot of your peers or the upcoming peers are setting up in India to tap into the talent here. How big a threat it is, because the pie of the deals is the same or shrinking, but the competition is just increasing.
We have been explaining this in the last few quarters. One important aspect we believe is most GCCs or most of our clients who set up GCCs in India are doing them for work that they normally will not outsource. Okay. The outsourceable work doesn't go into, there could be some amount, but most of the intention is to do some work which cannot be outsourced. So our share of the wallet, our addressable space itself is not shrinking in a big way. And second, this phenomena is been there for long. Like we talking about it. For instance, like if you take a financial services industry, everybody has been having a GCC for so long. So yes, there will be some impact, but is it material that we cannot mitigate? No, like it's not a very material impact at this time.
Okay, not a big material impact, but what did have a material impact this time around NGS was the BSNL deal and the kind of ramp up that happened, and of course the support it gave to the top line growth. My question to you is, going forward, will there be a further ramp up in the sense that there will be acceleration in terms of billings, or there was some bunching up or front loading that happened in the quarter gone by?
No, we have just started to deliver in small chunks of radios and installing those 4G, 5G related equipments and providing services. It should, we have a plan in terms of ramping it up, and then I think typically it will follow this bell curve pattern, right? We have started at the lowest of the bell curve now. Slowly it will go up, and then over the next 4 to 6 quarters, it will come down, and we would finish 100,000 sites of installation and commission that network smoothly. And post that, I think we'll have to support BSNL with the maintenance and operations of that, and keep optimizing the indigenous network that we are rolling it out for them.
Sure. So overall, you're saying next 4 quarters is when we'll see a bit of a peaking up. But before I wrap up, just a couple of quick questions. In terms of Q4, the furloughs, do you think are going to be normal, or is it going to be a bit more extended this time?
Generally, it's about 2 to 3 weeks of furloughs in Q3 and about a week of furlough in Q4.
Similar number.
I think we are experiencing it the same
It's
thing.
been similar like last year.
And lastly, if I had to ask you to rate the demand environment from 1 to 10, 10 being the best, where are we right now? Give me a number and no qualitative statement this time.
I would say we're around 7.
Yeah. Could be, between 5 and 8.
That's such a broad range, Angie,
No,
but at least I'll take 7 there as the indicating factor there.
7 is an average, but there are some verticals, maybe it's 5, some verticals, some markets it is 8 or even 9, right? So on an average, I think 7 is a good number.
Okay, on that note, I'll let you go, gentlemen. Thanks so much for making time and speaking with ET now.
Thank you so much, Anisha.
Take care.
With that, it's back to you guys.